Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. Today is February 1st, 2024, and we're going to start off with stating that some of yesterday's crystal ball readings were correct. I had stated that HYT, high yield corporate, had indicated that the markets really didn't care what happened yesterday, and that, there was plenty of strength in the market. And today that was proven to be true. Now, granted, the amount of bullishness today in the S&P 500 likely came off of the back of a lot of good earnings reports too. There's a lot of earnings coming out this week, and that's probably the most influential thing going on in markets. Is it's earnings season, how much companies are making. To highlight continued strength, we see this is SPY, and actually this candle represents aftermarket, which differing from the SPY here a little bit with the chart pattern, because after hours Facebook came out with a big announcement saying how they're going to do a big buyback and pay a dividend, and it's way up in stock price. And for that size of a company in the S&P 500, by itself it can have a pretty big influence on the entire S&P 500, and that's largely what we're seeing there. But again, HYT, not only did it not care about yesterday's potential, more tightness, we got rid of the idea that we could have a cut in March, and the market didn't care. I said that my crystal ball rating was correct, and today, it's risk on. It's clearly risk on. This everything looks strong. Everything looks bullish. The one thing that shows a little bit of caution is here on the VIX. The VIX isn't completely convinced yet. We still have people gambling enough that not everybody's so settled. This is still an uptrend. This is an inside day, which means this movement going up is likely to actually continue going up from a charting standpoint. What's a pretty basic charting pattern right there. So it indicates, maybe have a little bit of caution. The VIX is a good fear indicator, and can be it can lead the market to some degree by its options. And so next thing we have is the TYX and the TNX. This is the 30-year bond yield and the 10-year bond yield. Holy mackerel. The past 4 days have just been an absolute waterfall in rates. I had stated my crystal ball rating had seen a head and shoulders pattern here, and it had broken held. I said that we were going to be headed up to 4.8. That reading was very wrong. Unfortunately, my crystal ball was clouded and we didn't get the right reading there. But this is a very important thing to be watching very carefully. This pattern suggests this is a three white soldier situation, the inverse of bonds. It's larger, larger, larger. And so we can expect this to continue. I'm starting to think that we might even, we might continue to break lower than the previous low here in December. Now, if that were to occur, do you see what I see? Because I see what looks to me like a head and shoulders here. Maybe we can call that a shoulder. Maybe we can call that a head. Maybe we can call this a shoulder. It looks like this is coming straight at this line really fast. And, by the looks of it, it looks to me like we're going to break right through. And I mean, what this kind of entails is that we may end up with a pretty good move to maybe even around 3% on the 30-year bond yield at this point. We may be headed straight there. I don't know, but it's starting to look like that. If this line breaks, I may be participating in some leveraged, well, basically TMF is a fund. If you don't know about it, it's a leveraged 30-year bond fund, which, with the gambling portion of my investments, I might take a little bite there. I will take a little bite there. Yeah, I will. But I wanted to add that, these head and shoulders patterns in this chart, in the 30-year bond yield, have proven to be pretty strong and significant moves, as we've seen in the past. I can't stop this thing from drying. As we've seen in the past, I remember this big one here, head and shoulders right here, broke through, boom. It was very clear that was going to happen, and it happened. We have head and shoulders all over the place that play out very predictably. Many of them pretty recently. And so, we might be looking at another head and shoulders pattern to be playing out. Again, this one's not the strongest. I figure the left shoulder here, we can count this as a longer shoulder. Even though it's not as big, it has length to it, and so that can add the volume that you'd normally see on the shoulder there. And this looks like a beautiful shoulder here. This is an obvious shoulder. This can be counted as an obvious head, and the neckline is pretty clear. So as far as crystal ball reading goes, it's setting up a very good setup. It's a very good setup as far as maybe a trading opportunity. As I mentioned yesterday, the yield curve, the long end falling. It still is falling, obviously, like you saw in the 30-year and the 10-year, and it's all across the curve here. And again, this is predicting, when this curve is going down, this is saying we're seeing more slowing of the economy moving forward. And so, overall, I feel like this market right now is best described as a roller coaster market. We're going up to the moon right now, and the bond market is preparing for a crash. And so, we can enjoy the ride while it's still going up, and be cautious. That's kind of my overall approach to everything right now. Again, BlackRock came out, saying, their thing is we're looking good for 6 to 12 months. And, they probably have tools and better crystal balls than I do. But, their ball can be wrong, my ball can be wrong. No matter what ball you're looking at, it's a time to be cautious. It's a time to just realize that, the likeliness of a waterfall in like everything and just stocks across the board is increasing in its chances, especially as markets continue to melt up at this point. The other 2 points I wanted to bring up today were just the economic data that came out. The 2 things that were most interesting. Initial jobless claims came out for January at 224,000. Expected was 214,000. Previous was 215,000. So initial jobless claims. So we were expected to have less initial jobless claims. In other words, less people saying we're losing our jobs, and instead we had more people say we're losing our jobs. And so with the market going up like this, it's either saying it doesn't care, or it's seeing bad news as good news still. There was an interesting article in CNBC that came out, I saw earlier, saying how the Fed wants good news to be good news. And I found that to be interesting because, there's two sides to that coin. That means good news, is good news, and bad news is bad news. Now, once we get to that point where true bad news is bad news, that's when things really fall apart. We've been in this good news is bad news and bad news is good news thing for quite a long time, and you know we're headed towards that reversing, I think. Um, you know, typically, before we have, after we have uninversion of the yield curve, markets tend to go up and then they tend to crash. That's the typical cycle. If you look through the Fred uh, data, it's pretty clear, and it happens like clockwork. So I'm expecting it, and my crystal ball, that's what I see in my crystal ball. Anyhow, final chart I wanted to bring up. We have uranium, we have this move up, this flag, and this pop today just went absolutely huge pop today. And this is very bullish. When we come out of a pattern like this, it's a flag pattern. This usually you end up with a measured move, so you end up with something like, if I can draw it real quick, from here to here, ends up working out to be something like from here to here. So we could easily see, I think, uranium, this uranium fund URA, get up to 34 before we start seeing it stopping or maybe reversing from there, or something like that, or pausing and going even higher. That's all I have for you today. Thank you for watching. I hope you enjoyed. And that's it. Robschild.